Hi everyone, welcome to the May monthly update. I hope you've all had a great month so far and celebrated the good news last week of the rate drop that the RBA has announced and that the majority of lenders have passed on. So that's a nice little bonus, but keep an eye on your lender. You may notice that it hasn't been passed on to you yet, like you're not seeing it in your bank account yet, or your internet banking. Just sit tight. All the lenders that have passed it on will make it effective as of a certain date. Some lenders made it effective the same day, some 2 days later. A lot of them are making it effective as of the 30th of May or the 6th or 7th of June. So just sit tight. It should come through and you should see it reflecting in the next 2 weeks. I'm just going to mention that there was a report this week that came out that suggested over 90% of borrowers have maintained their higher level repayments. And this is just from the February rate reduction. So if you're one of those, well done. I highly recommend that you continue on the high repayments if it's feasible for you guys, because that is going to save you substantially in interest over the life of the loan. Just a little bit extra absolutely saves a lot over the long term. So if you can do that, please do so. It will only benefit you. I did mention with Simon when I was talking about non-bank lenders last month that I would circle back to it this month and just sort of give you a little bit of a education session, I guess, on what a non-bank lender is. So as you know, all the big four, ANZ, Westpac, CBA, etc., they're a traditional bank, I should say. They get all their funds for lending and borrowing purposes from their customers. So from the savings that they hold, from your transaction accounts, basically their customers fund their lending. That's what a traditional bank does. A non-bank lender gets their funds from elsewhere. Basically, they're non-deposit taking institutions. So that means they don't have savings accounts. They may have a transaction or an offset account for you, but they don't rely on those funds or those deposits to fund their lending book. What they do is they may be backed by an insurance company, or they may be backed by a super fund, and they get their funding elsewhere on the wholesale market. So that's all it means when I say it's a non-bank lender. It just means they get their funds to lend to you from somewhere else, not from their existing customers. What else can I mention? Well, some interesting things that I'm seeing this month is pricing for existing customers at banks. So as most of you know, being existing customers, we do an annual review on your interest rate with your current lender. And when we've been doing those lately, especially this month, we have noticed that the banks are in a cycle, and it is cyclical. The banks are in a cycle of not offering great discounts to meet the market to their existing customers. So something to look out for when we do our annual reviews, if we reach out to you to have a bit of a chat, it's just 10 to 15 minutes of your time, and we can let you know where your current rate is sitting and just give you an idea of what you could save or move if you moved, to a different lender at a lower rate. So keep an eye out for our text messages or emails for our annual review. Won't take much of your time, but it could save you substantial money. So I wanted to keep it short and sweet. I'm not sure if I mentioned why Simon's not here, but he's on annual leave, well deserved, but he will be back next month to join me. So until then, have a good one, have a great week, and I will see you with Simon next month. Okay, bye.